Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Yes, Santo is back, your favorite anchor. Santo, how does it feel to be back to the grind again?
Definitely, I think the warm weather of Mumbai is very welcoming, more so after the overcast skies in Bangalore.
Clearly, that leave has not done anything for the sarcastic tone of Santo. At least I think that has retained itself. That said, well, the big news today is coming out from the FMCG sector, and I think a lot of ITC investors are going to be pretty happy with the news flow that is coming out. ITC hotels may soon get delisted and listed on the bourses. That is what a Times of India report is coming, saying today. Sanjeev Puri, the MD, has spoken to Times of India and he has suggested that this possibility or this event could be on the horizon very, very soon. Now, we know that we have talked about it previously also, Santo, in the show, that they were looking at a possibility of the demerger of several of the businesses, but of course the hotel business remains top of the agenda. And you will also not be surprised, given the sort of, the rally that hotel stocks are seeing at this point of time on the street. One would not be surprised to see that hotel is the first business that they're looking at demerging. But from my point of view, I think, probably the price has already factored this in. I mean, if you look at even when the first news flow came in back in July, the stock has already rallied about 10-15% from that level as well. So I feel good news, it seems most of the good news around ITC has been baked into the price. And if you look at the recent action, it just doesn't give that much confidence that the upside is too much from here on.
Well, you're being quite uncharitable there, CJ. Look at the stock; it's done more than 50% in
Exactly my reason.
So, see, CJ, at this point, I think there is too much focus being put right now on the demerger of the hotel division, which is good. But I think the story in ITC is just more than just merely the hotels division. For a change, I think after a very long time, I think the stock is firing at all cylinders. Look at each and every business of it. Okay, look at the June quarter numbers. That's what seemed to have really changed the game for ITC, and probably that's what the market was anticipating as well. Each of the business, cigarettes for instance, 29% revenue growth, FMCG 19% revenue growth, hotels 41%, and if you look at the paper packaging and paperboard, that's also risen by about the results there. The revenue there is up by close to about 43%. FMCG, which is excluding the tobacco part of it, the growth there has been pretty good, around 20% up. All the margins were under pressure, but that's been the case with almost all FMCG companies. And also look at its agribusiness, up 82% revenues year on year. The numbers are pretty strong there, and CJ, even now, there is a fear, at least the concern in the market is that probably the stock has got a little overowned after the rally, but that doesn't really seem to be the case, because if you look at institutional holdings, they have not really changed in a big way. Of course, over the last couple of quarters, they've gone up slightly, but if you were to look at it even 2 years back, it's still lower than what it was. So, to that extent, I think there is still room for further re-rating in the stock, and CJ, I don't think the story is over so soon.
The Santo, foreign institutional investors will generally not be buying ITC for the long term, right? It will never be a portfolio pick for them because of the fact you have ESG concerns, you have the tobacco business, which is anyway, let's not forget still that almost 2/3 of the company's revenue still comes from the tobacco business. So no matter how much ITC may want to rebrand itself as an FMCG company, it will always still be getting the valuation multiples of a tobacco business. And I think FIIs in general are not really happy owning tobacco business globally. It's not only here. Yes, if you're looking at dividends, great, you can keep it as part of your portfolio. But if you're looking at growth, then that is why I think ITC struggles a little bit to attract FII investors. From a tactical point of view, of course, it might have played out well. If you bought ITC at the beginning of this year, or even probably around October, November last year, when the pessimism was probably at its peak with respect to ITC, you have made handsome amount of money. But going ahead, I think if you look at domestic investors, they were the one who were, riding it out with the company. Not only domestic mutual funds, but retail investors as well. And they are the one who have utilized this rally to probably book their profits, because they have been holding on to the stock from 2018-19 onwards. So they have made almost, in some cases, 75-100% sort of returns. And I think that is why I feel if you look at the stock from a technical level as well, it seems like it's getting into that exhaustion zone, right? Where there's a little bit of consolidation after a mega rally. And major investors also, I mean, somebody like a PP FAS mutual fund, which was probably one of the earlier bottom fishers in the stock back in 2020, they have also started paring their stake in the stock from July onwards. So for me, I think that gives me a signal that maybe the best of the rally has been had, at least for 2021. We don't know what may happen in 2022. Maybe there are different triggers for the cigarette business with the budget coming up. Always around the budget, you always have uncertainty around the cigarette business. But at this point of time, it just seems that the rally is capped.
Well, with that, let's move over to the markets, CJ.
Yeah, well, Santo, the setup today is surprisingly positive. After a bit of a lackluster opening that we have seen over the past two sessions, today the SGX Nifty is indicating almost more than 100-point gap up open for the Nifty today. I think it is a reflection of the rally, the massive rally that we have seen in Wall Street overnight. Nasdaq index ended its 7-day losing streak yesterday and rose more than 2%. The S&P was higher by about 1.8%. So clearly, although there is no real major trigger behind this, there is no major news behind it. It seems to me that some of it is positioning, because there was a lot of short positions in the S&P 500 as well as on the tech stocks in the Nasdaq. So clearly, those short positions have been covered. Also, with Apple coming out with its new version of the iPhone 14, and also not raising prices too much, Santo. I mean, people were expecting that iPhone would be probably priced more than $100 higher than the previous price of $99 to $1,000. They have not really raised prices at the premium end of the segment. So that really goes to show that maybe raw material issues or concerns around cost inflation maybe not be as paramount as they were earlier. So Wall Street,
or seen another way, CJ, maybe they've realized that customers are not willing to pay.
And absolutely, but counterintuitively, the cheapest iPhone has now become more expensive by $100. So that goes to show, I mean, how the situation is as far as iPhone is concerned. If you look at the US 10-year bond, that also fell. So that bond yield also fell. So that should be good for an emerging market like India. And crude oil prices also weakened.
Well, right now, I think it's a very interesting trend that is playing out in the market. If US markets fall, we don't fall as much. But when US markets rally, decoupling clearly is the theme at this point in time. If you look at the performance of MSCI Emerging Market Index versus MSCI India, there's a sharp divergence. So there is still debate on whether the India has truly decoupled. But for the time being, given that we're in a much better place in terms of our economic fundamentals, most likely this trend could continue.
Yeah, I mean, Morgan Stanley yesterday came out and said, Santo, that they are expecting almost 25% CAGR earnings growth going ahead if the capex recovery continues at its current pace. And that is why I think Morgan Stanley's argument is that if you look at the 25% earnings growth compounded for the next 3-4 years, then today's prices are actually cheaper. They do not look as expensive as a lot of people are making it out to be.
Well, with that, let's quickly take a look at the stocks on our watch list this morning, starting with Container Corporation of India. Now, the big trigger for the stock yesterday, it was one of the major gainers, and the trigger has been clearly the government's decision to revise the railway land lease policy.
Something that has been awaited for a long
time. Now, what basically this means is that the container handling companies, which were paying about 6% of the land value to railways, now will have to pay less than 3%, in 1.5% in some cases. That had been one of the major recommendations of the Niti Aayog, and finally that has been accepted. Now, why this makes a big difference for CONCOR is that it basically means that the privatization process, which had been slightly stuck because of this particular clause, maybe that's been addressed to a large extent, and we could see some movement there. Already the stock has been one of the best performers of this year so far, CJ, and most probably just this news could keep it in the limelight for some time. Nomura and CLSA are among the brokerages which are bullish on the stock at this point.
Well, Santo, there is one caveat to this, this change in norm that the cabinet has approved. The only thing is that it does not automatically go from 6% to 1.8% or around that level, because now what will happen is that when you're bidding for a new, sort of a tender, all bidders will now be allowed to come to the 1.8% rate. So it does not mean that the existing contracts that, say, for example, CONCOR already has with the Indian Railways, all those land lease rates now automatically shift from 6% to 8%. So it will probably happen for the new contracts where CONCOR will probably be bidding with all the other private, container providers such as Gateway Distripark. So a lot of people believe that this could be very positive for a stock like Gateway Distripark as well. For me, I think the biggest trigger from here is that privatization might become simpler. I think a lot of people were seeing this as a big overhang as far as the privatization is concerned. But I would still, I will still not be gung-ho that, okay, now that this has happened 6 months down the line, CONCOR will be privatized. I feel that this is still a very long process and it is going to take a long time. We have already had a pretty sour experience when it comes to BPCL. So for me, I think, yes, the gains have been strong, but probably some short-term investors might look at some profit booking. Well, next stock on my radar is Borosil. It's the stock from, related to the consumer-facing sector. The kitchenware segment clearly is something that analysts believe could see very, very strong demand in the ongoing festive season. With Borosil, the benefit is that they have also improved a lot of their balance sheet during the pandemic, and therefore they are now at a much stronger position to price away market share from many of its peers. They are already market leaders in many of the kitchenware segment. Also in the opalware segment, there's one of their brands has almost 25% market share. So clearly, if the unorganized to organized shift happens, Borosil is seen as a big beneficiary there. And brokers from GEPL Capital, which has initiated coverage on the stock recently with the buy rating, they are expecting almost a 27% growth as far as revenues are concerned and almost 31% growth as far as earnings are concerned over the coming year, Santo.
Well, the stock has made a good comeback after peaking out sometime in November, and probably the run-up at that point in time was in anticipation of
reopening.
A big reopening, and also a big jump in earnings. That's what the market seems to have anticipated and partly got it right. But if you look at the last 4 quarters performance, CJ, again the top line has been kind of restricted to a narrow range, and besides that, the consistency in operating profit margin has also been a bit of a worry. So yes, at this point in time, the company, once again, the stock needs to demonstrate that it's on a high earnings trajectory, and maybe that's what could further push the stock price higher.
I think, Santo, on the margin front, clearly with the softening of raw material prices that we have seen sequentially, I think that should clearly provide some bit of a visibility as far as margins are concerned.
Well, last stock on my watch list is Apollo Tyres. A fantastic performance again. Up to the stock has risen close to about 60% in less than 3 months. So, and you also have some brokerages turning positive on Apollo Tyres. Morgan Stanley and CLSA are among the ones which are bullish on the stock. Now, multiple triggers here. One is that the outlook on the auto business in India, which is 2/3 of the revenue, that's turned very positive. Now, some brokerages are cautioning that the European part of the business could face some inflationary pressure, but right now it's the India business which is the dominant part. Again, look at raw material prices, both in terms of crude oil prices as well as rubber prices. There's been a clear easing, and that should provide some relief to the margins as well. So good performance by the stock so far, and probably this, CJ, could continue in the coming days as well.
Well, Santo, for me, of course, the major risk is the European business. Clearly, this is something that we have already spoken about with respect to Balkrishna Industries. Of course, Apollo does not have that much of an exposure as, say, a Balkrishna Industries does, but it clearly has decent amount of exposure. And with the European economy most likely entering a recession in the coming few months or maybe quarters, it is very, very likely that that business might cap upside as far as Apollo Tyres is concerned. Also, Santo, if you look at the September quarter itself, some of the brokerages are a little wary that seasonality could affect volume performance in the September quarter. So I would not be betting on a blockbuster earnings in the September quarter as far as Apollo Tyres is concerned. And lastly, yes, raw material prices have eased, but let's not think that this is now going to be the norm going ahead. At this point of time, the crude oil market still remains very volatile, and you do not know what 2023 has in store. So I would hold my cards still and not bet big on the margin revival.
Well, with that, the market has opened a very strong opening there. 139 points up on the Nifty now. Wow. It's at 17,765. 1900 stocks are up on the NSE and 170 down. Very strong market. Mid-cap index is up close to 1%. Nifty Bank is up close to 1%. So looks like the bulls are in absolute control.
I think a little bit of short covering also I think is happening. That gap of opening, if we are seeing that move continue, clearly some bit of short covering is also aiding this move. If you look at the sectoral indices, the entire NSE sectoral pack is in bright green at this point of time, led by, of course, the Nifty IT, the Nifty Bank, Nifty Auto, and the Nifty PSU Bank Index. So clearly, some of the sectors where short positions were actually quite high, such as IT. I think you are seeing some bit of covering there. If you look at the Nifty Small Cap, the Nifty Small Cap Index 100 is currently the market leader. It has remained the market leader for the past 2-3 weeks now. The Nifty Small Cap 100 Index is higher by about 1.2% at this point of time. So clearly very, very strong opening, and we would hope that this continues, Santo, going ahead. Moving on, last stock on my radar today is Oberoi Realty. Now, the stock came into my radar because the technical setup on the script is looking very, very interesting. Recently, it has given a breakout from a trend line on the technical charts, and a lot of technical analysts had pointed this out to me that this breakout looks very sustainable because it has come on the back of very, very strong volumes. If you look at the weekly RSI, which is a momentum indicator as far as stocks are concerned, that weekly RSI for the stock has moved now above the 60 level mark, and which is usually a very strong buying zone if you look at it from a technical point of view. Overall, LKP Securities, which has also highlighted the stock, they believe almost a 19 to 23% upside, Santo, in the next 2 to 3 weeks. Now, this is just the technical side, but if you look at Oberoi Realty overall as well, this is a turnaround story within the real estate pack. Yes, there have been a lot of doubts about the real estate sector with respect to rising interest rates and how will that affect home loan demand. But so far, as far as pre-sales are concerned, as far as June quarter earnings are concerned, clearly real estate companies have shown that demand has not been affected. And if we are to see a revival in the capex, I would not think that the real estate sector or the residential property sector would be too far behind, Santo.
Well, hard to argue against Oberoi Realty at this point in time. It's always been one of the more disciplined and companies with cleaner balance sheet in the real estate space, and the Mumbai market, where it is which is the biggest market for Oberoi Realty, that clearly is still in a bull run at this point in time, and we have seen that reflect in the numbers of Oberoi Realty over the last 3-4 quarters. Now, only gripe at this point in time is that the company's borrowings also have risen quite sharply over the last 3 years. So that's the only concern. But apart from that, the short-term indicators all seem to be in favor of Oberoi Realty.
Well, Santo, that is it. I think that is it for the show today.
Yes.
Would you wrap it?
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and do let us know what you thought about this show. Do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again at 3 p.m. today. Till then, have a great trading day.